Investment Company Act of 1940 regulates companies investing in securities. Investment company, a company that invests on behalf of its shareholders, establishes three main types of investment companies. F.U.M. Types of investment companies. Number one, face amount certificates. Number two, unit investment trusts or UITs. Management companies, open end and closed end companies. Then they are subclassified as either diversified or non diversified. Face amount certificates. Issue certificates usually purchased on an installment basis at a discount. Very few face amount companies today. Certificates mature after a period of years for the face amount, usually invested in fixed income medium term bonds. Number two, unit investment trust, UITs. Invest in a fixed portfolio of securities. Once the portfolio has been created, it is fixed to maturity, not managed, so no management fee, no board of directors, created by brokerage firms, often made up of bonds. Fixed UITs purchase stocks and bonds. Non fixed UITs purchase mutual funds. Number three, management companies. Investment companies which actively buy, sell, and trade securities held in their portfolio according to the prescribed investment objective. Require prospectus at time of solicitation or with confirmation if unsolicited. Prospective cannot be older than 16 months. They are classified as either open end or closed end. Open end and closed end management companies. Open end, primary market redeemable. Continuous primary offering, unlimited number of shares, full or fractional. Sold and redeemed by issuing company U, W, or BD redeemable. Common shares only. ASK/POP equals BID slash NAV plus SC disclosed in prospectus required at time of solicitation. Always sells at NAV. Series 6 license required. No sales charge on redemption. Shareholder rights. Voting and dividends. A mutual fund is classified as an open-end investment. Must file registration settlement with the SEC. Continuous primary offerings therefore requires a prospectus. Company may borrow money from banks up to $1 for every $3 of assets or 300% minimum asset to debt ratio, 3 by 1. Asset to debt ratio or 1 by 3 debt to asset ratio. You cannot buy mutual funds on margin. However, if held for more than 30 days, mutual fund shares can be used as collateral in a margin account to buy stocks. More info on ask/pop equals BID/NAV plus SC. Closed end secondary market not redeemable. Fixed number of shares, authorized full shares only. Traded by B/D and the secondary market non redeemable. Common preferred shares or debt securities. Price determined by supply and demand. Series 6 or 7 required for IPO. Series 7 required in secondary market. May sell above or below NAV. Commission to buy and sell has fixed capital structure. Shareholder rights, voting, dividends, and primitive rights. Both open and closed can be subclassified as either diversified or non diversified. There is no requirement that a mutual fund be diversified. Diversified. The 75-5-10 test must invest at least 75% of I'm sorry, 75% of assets according the fund's objective of the 75%. No more than 5% can be in any one company at a time. No more than 10% of any single company's voting securities can be owned by the mutual fund. Variable contracts annuities, annuity investment options. How does the account grow? Fixed, number one, fixed annuity has a minimum guaranteed rate of return, for example, 3%. Premiums go into the company's general account, which is invested in conservative investments like bonds. Current rate is determined by the performance of the company's general account. Annuitant receives the higher of the two rates, guaranteed or current. This provides a level benefit payments to the annuitant. However, it will have less purchasing power during times of inflation. The company assumes the risk. Number two, equity indexed annuities, combination annuity. Like a fixed annuity, it has an initial guaranteed rate, but the current rate will change periodically based on a stock market index like S&P 500 index. Annuitant will receive the higher of the two rates, considered a fixed annuity because it has a guaranteed rate. It seeks a higher ROR than a fixed, but is less risky than a variable. Variable annuities. Premiums are invested in the market, so they have a variable ROR based on the performance of the funds invested in. Agent has to have a securities license, register with FINRA. Funds are kept in a separate account for each client. ROR is dependent on the performance of the funds invested in. The client assumes the investment risk since there is no guarantee of principal interest or investment income. Sold in accumulation units, which convert to annuity units at annuitization. Annuitization, a one-time irreversible event in which the annuitant gives up rights to the lump sum in exchange for a stream of income. Share classes, the mutual fund concept. Mutual fund, a pool of investors' money which is invested in various securities as determined by the investment company's objective. Mutuality, each investor owns an undivided equal interest in the portfolio. No one has preferred status. Main advantages to ownership. Guaranteed marketability. Under the Investment Company Act of 1940, they are required to redeem the current value of clients' shares within 7 calendar days from date of request. Professional management diversification. Other advantages of mutual funds. Automatic reinvestment of dividend and capital gains at NAV, no sales charge. Redeemable, does not trade in the secondary market. Dollar cost averaging. Safekeeping of portfolio securities. Exchange privileges within families of funds. No sales charge within the same company. Systematic purchase and withdrawal plans. Tax and record keeping information, Form 1099. Typically smaller investment requirements. Reduced sales charges based on amount investment. Breakpoints. Voting rights for the BOD and changes to the fund. Reinstatement provision allows withdrawn funds to be reinvested in 30 days at no sales charge. Funds and expenses. Sales loads. A, B, or C shares. Max is 8.5% of AS/POP. Sales load compensates the sales force, the B/D or UW. Expenses. Costs incurred to run the business, the fund. Operating expenses. Salaries and administrative fees. Fund portfolio management fee. Largest expense. Paid to the fund manager slash IA and their team to manage investments in the portfolio. Charged to fund annually, but paid out quarterly. Percent of AUM, asset under management. 12B slash 1, or I'm sorry, 12B dash 1 asset based fee. Section 12 B, or I'm sorry, Section 12B 1 of the Investment Company Act of 1940. A 12B1 fee is a fee that can be charged to the investor to cover expenses associated with promotion and distribution of the fund, including sales, literature, advertisement, and commissions. Determined annually, either percent or flat rate, but charged quarterly. 12B1 fee must be originally and annually approved by number 1, the majority of BOD, number 2, majority of outstanding voter shares. Types of sale charges, aka loads, share classes. Class A, front end load, good for lump sums, has breakpoints and rights of accumulation, has lower 12B1 fees, expense charges. Ax pop equals BID NAV plus SC. Class B has back end load or contingent deferred sales charge, CDSC, like surrender charge. Beneficial to long term investors. Eventually convert to A shares, typically 6 to 7 years, which have lower expense charge, no breakpoints. Class C, level load, 12B1 asset based fee. No sales charge, but higher expense charge. Better for short term. Max 12B1 fee is 0.75%. If 12B1 fee is greater than 0.25 of average, net assets cannot call it no load. This would be a violation of FINRA rules or fair practice. Or I'm sorry, FINRA rules of fair practice. Breakpoints and other privileges. Breakpoints quantity discounts on open-end funds. The larger the purchase, the lower the sales charge. Take note, most mutual funds allow the customer to combine values of immediate family's accounts, spouse and minor children to reach breakpoint discount, but no breakpoints for investment clubs. Letters of intent. If a customer is close to a breakpoint but does not have quite enough funds at that moment, they may sign a letter of intent, LOI,